Hiya, right, Letchworth property market. What will stamp duty cuts and interest rate rises mean for the Letchworth homeowners and landlords? Now, recently, the Bank of England increased interest rates to 2.25, and it's likely there'll be another percent before, well, sort of within the next 6 months at various times. Now, this is affecting affordability for first-time buyers, and also it's concerning people in relation to they're coming off their fixed rates that they secured at a very cheap interest rate a year or so ago. So the next 12 months, there's going to be a lot of homeowners who are financially going to be in a very difficult situation. So the first thing in relation to these media reports, they do love to dramatise a little bit, is how many houses will actually be impacted by this in the next year. Now there's sort of nearly 8 million homeowners in the UK. 6 million of them, or just over 6 million, are on fixed rates, and the average fixed rate is 2.04%. Now the industry are suggesting that 1.3 million will be coming off their fixed rate in sort of 12 months' time. Now, as I do this video, there's a remortgage product, 3.8% with the Royal Bank of Scotland for 5 years. So effectively, what would the difference between those two interest rates, 3.8 and 2.04, make to your repayment? Well, if in 2019, for instance, you took a 25-year mortgage at 2.04, your term will be 22 years. So your payments will go from £1,100 a month up to £1,550. So that's £450-ish a month that your mortgage repayments are going to go up. Now that is scary. It's a lot of income, but there are options. Now, this isn't advice because I'm not a mortgage advisor, so the FCA, calm down. I'm not actually telling people what to do. I'm just saying that there are other options other than the fact they may have to hand their keys in because they're so destitute. Is what I'm saying is mortgages are quite flexible when you get to a remortgage. You can renegotiate your terms with a lender potentially, depending on criteria for you, affordability and criteria for them. So you could extend your term to bring your payments from £1,550 down to the level sort of around where you were, or sort of an affordable level. Now this doesn't need to be something that you do forever, but you could do that for an interim till you earn more money, or maybe interest rates come down, but that's probably not going to be for quite a while yet. So there's that option. So there's not sort of a case that you're going to have to really suffer. And also the thing as well is there is two differences. There's I can't afford it and I can't afford it, which sounds a little bit silly, but if you hear me out, I can't afford it to, I actually can't. If I pay my mortgage and my bills, I literally have got like 50 quid to feed myself for the month. So you're choosing that option over the fact you can actually eat. Now that's, I can't afford it, which is a situation which is clearly going to be stressful and concerning. I can't afford it is another thing to do with a lifestyle choice. I can't afford it within my lifestyle, so I maybe don't eat at Nando's every week. I have it once a month, or the gym subscription that I have where I know I haven't been for 15 months, but I pay it to make me feel like I am a gym member. Maybe you should cancel that, or TV stuff, Prime, and Netflix. Do you really watch these things? You know, there are options on how you can adjust your lifestyle to fit in with the extra cost. And because interest rates, mortgage lending has been stress testing at 6 to 7%, in reality, this is more of an affordability adjustment rather than I actually can't afford my mortgage. So that's the thing with interest rates. Stamp duty, the Chancellor doubled the zero rate. So from 125 to 250,000, most properties in Letchworth are over 250. So there will be a £2,500 saving on stamp duty. And even if you had already bought a house before the announcement and it's still going through, you're going to benefit from that. So that's sort of where it is in terms of stamp duty. And obviously landlords, if you're investing in property, you'll gain that money as well, but you still have to pay your surcharge of 3%, etc., etc. So the question is, what's going to happen with house prices? And fundamentally, they're predicting that there'll be 25% less people moving to Letchworth next year, which I actually don't really agree with. There's more choice coming on the market, there's more properties. So what we've had is, even though the market's been faster moving and properties have sold really quickly, the reality is that there's nothing to find. Once they sold the house, they can't find anything because there's actually been not a lot of property there. Whereas now the property levels are starting to increase because the market is transitioning from the seller's market we've had into a buyer's market where choice is going to be more poignant. So the likelihood is there will be a slightly lower level of transactions, I think maybe 5%, but the market still will be moving Letchworth over the next sort of 12 months, even though interest rates will probably go up a few times in that sort of period. So to conclude, I believe that due to that means that property prices in Letchworth will generally stay pretty standard, pretty same as they were, but there may be a slow incline of where the values sit as interest rates adjust and affordability is out there. But if you price your property sensibly, then you will get moving. The thing is, if you look at it, if you're a first-time buyer and you're leaving, you think you should leave buying a home because of what's going on in the market potentially in front of you, then the thing you need to look at it a different way. Rents are rising, so where you're renting is just going up. They're going up considerably as well. So all it's going to do is it's going to almost handcuff you further into the rental side of it, and you don't know what's going to happen in a year. And if you get onto the property ladder, you'll probably be on there for a very long time, and property prices will go up and down through your lifetime. So the reality is, if you can afford a mortgage now, then you should buy the home and get onto the housing ladder, and then you go on that journey. Just make sure that the mortgage you get is affordable, and you can fix for the longer term. If you're upsizing or downsizing, you know how the market works. So in reality, if you can get the right price for yours and you can buy at the right price, it fits, then just get yourself moving. If you're a landlord looking to invest in property, people will say, well, why don't you wait until the market goes down? Well, you'll just be paying higher interest rates on your buy-to-let mortgage. So if all the figures stack up now, because there's some really great yields locally, they're a lot higher than they were 5 years ago. Sort of 5.5, even sometimes 6% returns on rental property. If you can get the right mortgage, just buy the investment, because you're not going to be in it for 1 or 2 years, you'll be in it for the long term. So that's how it sort of works. So that's my sort of view on the electric market. If you've got any questions about that, any thoughts, feel free to give me a call and I'll catch you soon.